Two of South Africa's neighbours are facing national emergencies for making the same mistake. Today we're unpacking what's going on over the border, Sasol's sudden market revival, and the stadium incident that left many Bok fans seething. Plus, in the Wildcard, we revisit the Karoo town that was once made one of the wealthiest areas per capita, thanks to something you'd never expect. My friends, if you're enjoying the show, be sure to like and subscribe. And now, with all that out the way, let's get into it. Two of South Africa's neighbours are sounding national alarms, and for the same reason, being that they built their economies on one industry. As we already know, Lesotho declared a state of national disaster over jobs last month. Now, the reason here was its textile industry, mostly denim made for the US, was just hammered by tariffs and trade uncertainty. Now, with their youth unemployment already nearing 50%, the government says that tens of thousands of jobs could just disappear if US trade preferences don't hold. Now, Botswana has arguably gone further, declaring a full-blown health emergency. President Duma Boko admitted this week that the country can't afford basic medicines after its medical supply chain just collapsed. Hospitals are cancelling surgeries, and shortages of HIV, TB, and cancer treatments are spreading fast. Now, the cause here is diamonds. Botswana is the world's biggest producer by value, and for decades, these sparkling stones funded everything from hospitals to schools. But with global sales down and USAID cuts, government revenue has just dried up. Now, as we speak, the army is trucking emergency medicines into rural areas, while debt to private hospitals has topped 1 billion rand. So you see, Lesotho leaned too heavily on jeans, Botswana on diamonds. Different industries, same trap. When a nation depends too heavily on one thing, a single downturn can spiral into crisis. Now, for South Africa, it's a reminder, when a neighbor built on one commodity falls, the shockwaves don't always stop at the border. Look, it's no secret that South Africans have been fuming at the ticket prices of the Springboks games. Tickets for this season's tests have gone from pricey to eye-watering, even with some of the nosebleed seats costing upwards of $1,000. Critics say that's why stadiums aren't filling up, pointing to what they call a greedy rugby board cashing in on a national treasure. So when a video went viral on Saturday of Cape Town Stadium's gates just being flung open and fans strolling inside, it hit a national nerve. I mean, to many it looked like proof that while thousands had been forced to pay beyond their means, others simply walked in for free. So the stadium CEO, Gina Woodburn, has come out insisting that this wasn't the case. She says that the turnstiles briefly malfunctioned, creating a dangerous backlog, and forced officials to open the gates for 15 minutes to relieve the crush. Now, according to her, only paying ticket holders were let through, but I'd be curious to know how they supposedly checked. Now, either way, for fans already angry about ticket prices, the optics were damning. Another reminder that rugby's biggest problem here isn't support, it's access. Sasol share price just had its biggest jump in 4 years, up nearly 12% in a single day, as investors finally saw signs that the company's turnaround is working. Now, for those of you who don't know, for years, Sasol's been weighed down by debt from its disastrous Lake Charles project in the US. But under new leadership, it's been cutting costs, shutting weak assets, and pushing its core fuels and chemicals business back to basics. Now, the result here is free cash flow jumped 75% to 12.6 billion rand. Headline earnings nearly doubled, and net debt is now down to $3.7 billion, only $700 million away from the level required to restart dividends. Now, as we've clearly seen, the market has taken notice. Sasol stock is now up 46% this year, and analysts say that it's the first time in years that the company hasn't had to explain away new problems. Now, the bigger picture is Sasol isn't out the woods yet, but after years of over-promising and under-delivering, it's starting to rebuild the one thing that money can't buy: investor confidence. And before we cruise on to our Bagel Bite of the day, here's a couple other headlines worth knowing. For starters, Cape Town has been ranked the 6th best prime property market in the world by Savills World Cities Index. Prices climbed 3.2% in the first half of 2025, beating London and New York. Proof that lifestyle still sells even in downturns. Airports company South Africa plans to raise 10 billion rand for upgrades, including a new 5.7 billion rand cargo terminal at OR Tambo. Now, with their profits nearly doubling to 1.1 billion rand last year, ACSA says that lenders are suddenly eager to back it. And Discovery Investors launched the Lifespan Linked Income Plan, a retirement product designed to tackle longer lifespans. It offers flexible income early, then guarantees from the age of 80, which is a pretty sound safeguard as research shows that many South Africans outlive their savings by a decade. And on to our Bagel Bite of the day. Let's see what you got. The question is, in which year did World War II end? Was it A, 1942, B, 1944, or C, 1945? Bonus points if you know the exact date. And on to our wildcard section. In the early 1900s, reputedly one of the wealthiest places per capita on Earth wasn't New York or London or Paris. It was Oudtshoorn, a Karoo farming town built on the back of very large birds. So the world had gone mad for ostrich feathers. Fashion houses in Europe couldn't get enough of them, stuck on hats, gowns, even fans. And by weight, top-grade feathers were trading like diamonds. Farmers ripped out their crops to plant lucerne for ostriches, and a new class of feather barons rose overnight. So their sandstone mansions nicknamed Feather Palaces still line Oudtshoorn streets today, relics of a boom so big that feathers rank just behind gold and diamonds as South Africa's top export. But like most bubbles, it didn't last. By 1914, overproduction and a global war killed the craze almost instantly. Farmers went bankrupt, palaces emptied, and ostriches were turned back into meat and leather producers. Still though, for a short period of time, a dusty Karoo town was the feathered capital of the world. And as for that Bagel Bite, the answer is 1945. The war officially ended on the 2nd of September 1945 when Japan signed its surrender aboard the USS Missouri. A reminder that while wars can start in a single day, they almost take years and millions of lives to end. And my friends, that's it for today's show. Thanks so much for tuning in all the way into the end. Again, this is your weekly reminder that if you do prefer your news on the go, whether you're running, driving, or pumping some iron, you can find us on both Spotify and Apple Podcasts. Links to both of those are either in our description below or our bio. I'll catch you guys all tomorrow for the next round of the good stuff. Be kind to one another, and I'll see you all then. Cheers.